morning. You're watching Market Cafe on ET Now with me, Shreyansi Singh and Snehi Shah. Over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerage is saying as well. But Snehi, first up, let's get started by looking at the international handover. And quite the interesting handover coming in because it looks like US markets are finally recovering some footing after
Well, absolutely. And Shreyansi, not quite a lot of footing because the moves that we did see intraday coming in for the US yesterday, some seller moves coming in for the US markets, and let's start by taking a look at what's happening when it comes to this entire space. Wall Street has been abuzz in trade yesterday when you look at it on an intraday basis. Stock futures were a little changed last night, but what's key to note is that in yesterday S&P 500 snapped a 6-day losing streak buoyed by a rebound in tech stocks. Wall Street also looked ahead to key earnings and economic data later this week. Now remember, investors are coming off a winning session yesterday. The 30-stock Dow has closed with an uptick of 0.7%. S&P 500 has advanced almost 1%. Nasdaq has outperformed all the other indices when it comes to Wall Street, climbing 1.2% almost in yesterday's trading session. Now both S&P and Nasdaq have ended a 6-day losing run, so some reverse coming in moves over there as well. Those moves come as investors bought the in tech stocks after a recent sell-off in key names such as Nvidia, which remember had dinged recently amid fears of higher inflation and the prospect of elevated interest rates. Information technology was the best performing S&P 500 sector yesterday. Nvidia jumped more than 4% during the trade session. Looks like the good days are back for Nvidia, and the chip giant pulled back by nearly 14% last week, its worst weekly performance since September 2022. Traders are also bracing for the release of mega cap earnings results this week. First up, Tesla will be reporting after the close on Tuesday. The electric vehicle stock has underperformed this year, down more than 40% amid fears of greater competition from Chinese competitors. Meta Platforms also slated to post results on Wednesday afternoon, followed by Alphabet and Microsoft on Thursday. Big earnings are what is lined up for Wall Street going ahead this week. On the economic front, then, investors will watch for the release of the new home data on Tuesday after the market closes. So while some key information coming in over there when we look at data coming in from the US market, largely very good handover coming in from the US markets. But if there's one place that's doing nominally better than the US markets too, that is the European markets, because DAX is up 0.7%. FTSE index has gained 1.6% to notch record. FTSE has closed at 8,023.8. That's a new high coming in for FTSE over there as well. 1.6% uptick coming in on FTSE, and the Pan-European Stock 600 index also comfortably in the green with a close of 0.6%, more than 0.5% gains coming in over the Stock 600 as well. So a largely very positive handover when it comes to the global markets. Both US and Europe seem to be doing well, but Shreyansi, take us through what's happening with oil, right? Because now Brent is comfortably below 90, so tell us what's happening.
Absolutely, and it's very interesting what's playing out with the oil and gold markets right now, because we're seeing a slight reversal in trend for both of these markets. First, let's take a look at oil. Then crude oil futures edged lower after it said it would not escalate with the conflict with Israel. Now, when you look at WTI contract, then that fell 29 cents to settle around $82 a barrel mark, and Brent as well fell just about 29 cents, settle around that $87 a barrel mark as well. And traders have largely dismissed fears that tit for tat strikes between Iran and Israel will escalate into a war, with the market focus to shift back to supply and demand fundamentals this week. So that's the change that we're seeing this week. Now, Iranian foreign minister also said that the country does not plan to respond to Israel's retaliatory strike launched on Friday. So when you look at price movement, then US crude oil and Brent fell 3% last week, and the two benchmarks are up 16% and 13% this year respectively. Now, what we're seeing here is that they've largely erased the kind of geopolitical risk premium that they were pricing in previously, especially last week. Definitely not towards the end of the week, but in the former half of the week, we could see a lot of this geopolitical risk premium being built for oil prices, and you're seeing a breakdown of that particular trend right now. Now, speaking of political risk premium, when you look at gold prices, they dropped more than 2% to a one-week low as worries over a wider Middle East conflict subsided, prompting investors to scale back safe trades in favor of assets like equities. So that's also the move that you're seeing coming in as well.
Well, absolutely good moves and interesting moves when you take a look at oil and crude, oil and gold as well. But let's kind of move on. Let's take a look at all the important events to watch out for today. And when it comes to India, you have the HSBC Global Manufacturing PMI number coming out. And well, it seems to be like PMI is the focus today because even globally, you have a lot of PMI data coming out. From the US, you have manufacturing PMI. From UK, you have composite manufacturing as well as services PMI. From Eurozone, you also have the manufacturing and services PMI today. So PMI is clearly the area of focus today in India as well as globally. Let's shift focus, come back home and talk about the earnings lined up for us. When it comes to Nifty earnings, then today you have Tata Consumer that reporting its quarter 4 numbers, and going ahead tomorrow, only speaking from the Nifty pack, you have LTI Mindtree, HUL as well as Axis Bank will be reporting its numbers tomorrow as well. Now let's talk about today. The corporate action that we're expecting to see today. Today is the last day to buy the shares of IFL Finance to be eligible for its rights issue in the ratio of 1:9. Anup Engineering will be executing its bonus issue in the ratio 1:1 today. Choice International will also be meeting to mull rights issue today, and Patanjali adds case. That case will be heard in the Supreme Court yet again today. Moving on, then, let's shift focus and talk about what's happening in the primary market. Then GNK India, that IPO will be opening for subscription today. It's the first day to subscribe to that IPO, so watch out for that also. And when it comes to other events, we have some key news coming over there as well, because Baiju's arbitration plea with NCLT, that is going to be heard today. And in other news, like I mentioned earlier, Tesla is going to be coming out with its numbers as well as Pepsi. So well, lots of cues to watch out for. Keep a close eye on all of these cues in today's trading session in India as well as globally.
Absolutely, and starting off some macro news then, while home buying for most of the US has decreased in the month of March, there still seems to be an interest among wealthier American luxury home purchasers, as luxury real estate sales increased 2% on a year-on-year basis in 3 years, although overall real estate sales fell for 4% nationwide in the first quarter.
Well, and in other news, the European Union has opened proceedings against ByteDance's TikTok and has threatened to suspend its newly launched TikTok Lite rewards program. This comes after the EU Commission said it was concerned about the new launch as it was brought without prior diligent assessments of risks it entails. TikTok has been given 24 hours to provide a risk assessment report for TikTok Lite or face fines.
Well, let's see how that pans out for TikTok. But moving on, then let's now highlight positive commentary coming in from Reader, Chief Investment Officer of BlackRock, on US rate cuts, as he envisions the Fed will be able to lower interest rates twice a year as inflation moderates in the months ahead. He also adds that swaps traders have dialed back bets on Fed easing and now see roughly 40 basis points of rate cuts by the year end.
Well, let's move on, talk about another asset class. Then let's talk about Bitcoin, because the world's largest cryptocurrency on Friday completed its halving, a phenomenon that happens roughly once every 4 years. Bitcoin is fairly stable immediately afterwards, but what exactly is halving and why does it really matter? My colleague Sharad is here with more details on this. Sharad, this is very interesting. It's an interesting phenomenon. Take us through it, please.
Well, yes, a major event has happened in the crypto space. Bitcoin has finished its fourth halving, and the immediate impact in the Bitcoin space has largely been neutral, as Bitcoin has been trading flattish in the range of $63,000 to $64,000. To put it in perspective, the Bitcoin halving is kind of a deflationary event, and that means that every 4 years the supply of Bitcoin will start becoming less. This time itself, so the mining rewards which are there, that will start becoming lesser and lesser, and all 4 important events of Bitcoin halving have already happened since launch. Now almost 1.9 crore out of the 2.1 crore Bitcoins which are there have already mined, so the supply is expected to be limited going ahead, and that would drive up the scarcity as well. Now if you look at the timeline itself, Bitcoin was launched in 2009 in the month of January. The first halving happened in November 2012 when the rate was just $12, and then the spike started coming in 2016. This number was $632, and then a significant jump in the third Bitcoin halving. That was roughly $38,000 in the year 2020. Also, what lies ahead for the Bitcoins after this event? First thing would be, of course, there would be price discovery coming in, and importantly, there would be more volatility expected in the short-term basis. And also, last 2 to 3 months, has been participation coming from the ETFs that has actually aided the rally in the overall Bitcoin space and even the crypto space. So it's expected that there would be volatility in Bitcoin going ahead, but the altcoins which are there, which are not Bitcoin but the related other crypto coins, they might see some kind of a buying happening, and that can actually aid their numbers going ahead as well. So this is the entire thought process of Bitcoin halving.
All right, thanks Sharath for that very interesting update. Moving on then, TCS introduced 60% work from office attendance and a revised variable pay policy as well. In conversation with ET Now, Milind Lakkar, CHRO TCS, spoke about the company's decision. Listen in to what he had to say as well.
Right now, we are targeting everybody to come to office. Everybody has to come to office, and that number is going up, rapidly every quarter on quarter. I expect to basically get back to pre-pandemic levels in about a quarter's time.
So how will that be life for TCS? Productivity, margins?
It was never about productivity and margins. It was always about culture. It was always about being together. It was always about having the TCS way in which everybody learns by being with each other. It's about learning from each other. It's about having fun together at work.
So can I say work at home, not for TCS, for in general, everybody has been more like a concept idea. It was more at a lab stage, but it is something which the world is not ready to adopt to.
I think, I will not say one way or the other. Different companies are doing different things. We believe this is the right thing to do. And right now, this is what will go forward. Going forward, if we have to make tweaks later on, we'll look into that as well.
Alright, well, that's the word coming in from the HR chief at TCS. But with that, viewers, we'll slip into a very short break. When we return, we'll take a look at how the Asian markets have opened up this morning. So you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets. In Asia Pacific markets largely extended gains as tech shares rebounded on Wall Street, and investors also look toward flash business activity figures from Japan and India. So figures from the S&P Global show that Australia's composite PMI hit a 2-year high, coming in at 53.6 against March's 53.3. So when you look at the ASX 200, that started the day up 0.3%. Currently, it's up about 0.4% after the PMI release. You see that 0.3% up move coming in for the ASX 200. Now, the Nikkei as well is not doing that much currently as we speak, but at open, it did about 0.8%. Now, Japan and India's PMI numbers will be released later, so keep an eye for those numbers as well. Now, SP on your screen not doing all that much, and it's had a flatter start earlier as well. Now, when you look at Hang Seng, then Hang Seng is up about 0.6% thereabout. When you look at Shanghai, on the other hand, a tinge of red coming in for Shanghai because it's down about 0.7% as we speak. Now, back home, we closed around the 2,300 mark, and currently what the GIFT Nifty is indicating is a rather subdued start with a positive bias coming in for the Nifty. So what the Nifty implied is penciling is 22,385. So both on a spot and futures basis, what you're looking at is a largely tempered start, but definitely a positive bias what we're penciling in right now.
Well, absolutely flat start indicated for us. We'll see how that pans out for us in today's trading session. But with that, here's the...
Welcome back. Thank you so much for staying tuned in. Well, it was an inline Q4 for big boy Reliance. Profit rose 10% on a quarter-on-quarter basis. Meanwhile, revenue and EBITDA were broadly in line with what the street was filling in. Soumit is standing by with the earnings fine print. Soumit?
Well, the consolidated numbers of Reliance Industries for the fourth quarter was pretty much in line with what the street was expecting. Revenue and EBITDA were higher by around 4.5 to 5% on a sequential basis. Margins stood stable at around 18%. Net profit was 10% higher, but that was on the back of lower finance costs and higher income. Other income, if you see, was up around 17% on a sequential basis. Segment-wise, if you see, the O2C segment has outperformed in the fourth quarter, and it also beat the analyst estimates. The growth was around 19% on a sequential basis, but on the other hand, if you see, the retail segment that has come in with a disappointment. The EBITDA was down around 7%. The numbers also below what the street was estimating. Oil and gas exploration pretty much in line set of numbers where EBITDA was down around 3% at around 1,606 crore rupees. Now, the reason behind why the retail EBITDA came in lower was because of the change in revenue mix, also because of store rationalization and because of seasonality effect that we see on a sequential basis. Also do remember retail EBITDA on a sequential basis has declined for the first time in the last 8 quarters. So we can see some kind of moderation when it comes to the retail business of Reliance Industries. Net debt was largely stable on a sequential basis, but gross debt has increased marginally by around 4% on a sequential basis to close to 3.5 lakh crore rupees. And when it comes to Jio, again pretty much in line set of numbers. Whatever sequential growth when we are seeing on Reliance Jio was pretty much on the back of subscriber addition. Subscriber numbers stood at close to 48.2 crore as against 47.1 crore in the previous quarter. ARPU was for the third consecutive quarter. ARPU has come in at just rupees 181.7 rupees. There has been no change in the ARPU for the last 3 consecutive quarters. Purely on the back of subscriber addition, the company has been able to report a growth when it comes to the telecom division. To sum it up, overall the numbers were in line. O2C was a beat, retail was a miss, oil and gas exploration and telecom business were pretty much in line set of numbers for Reliance in the quarter.
Thanks so much for taking us to Reliance as well as Jio numbers as well. But we also caught up with Sanjeev Bhasin, director at IFL Securities. Listen into what he had to say about Reliance's numbers as well.
We can see volatility. I don't rule out 3,500 to 3,700 coming on Reliance. 3 things stand out. One, China has bottomed out. If you see commodity prices, metals, that is seeing very, very strong demand. Specialty chemicals as such again come back. And I think the China destocking or over inventory will be done with. 2, you have ARPUs at 180. Now, who thought that 130, 150, 170, 181? I think ARPUs are headed above 200 if what Bharti is indicated. And that will be the icing on the cake. Third, we have not even talked about the new energy business in which Reliance is expanded very, very strongly. And that is again going to be a game changer as far as solar, green energy and these are small contributors. Some of part they could make up the case for individual segments to do extremely well.
All right, then moving on. IRDAI's new regulation revolutionized health insurance, banning premium hikes based on claims and allowing portfolio-based adjustments, discounts for good claim records, and flexible age limits signal a dynamic shift, while portability also offers flexibility in policy choices as well. Let's go across to Anurag Shah for more details about this.
Retail health policy holders has been affected by in health insurance premium regardless of their claim history. So in new product guidelines of health insurance product, insurance regulator IRDAI has asked insurers not to increase the premium of a policy holder based on the basis of their claim history. On the other side, insurers should change their premium on the overall portfolio basis, the overall experience of the health insurance portfolio. So this is also another development other than reducing the moratorium period from 8 years to 5 years. So now companies has been asked to change their premium on the basis of overall portfolio experience. So, IRDAI has also given a complete freedom and removed the age of 65 years. So previously the 65 year was the threshold where there was no restrictions, and above the 65 years companies were independent to decide to give policy to any individual or not. But now this age has been removed, so companies can decide their own age limit. Any company can have an age limit of 50 years or another company can have an age limit of 70 years to give a policy, health insurance policy to the senior citizens. So this is also has been the age limit has been removed by the insurance regulator IRDAI. Other than that, for portability also new guidelines mention that portability the same benefit and the same sum assured. Insurers have to allow the portability to the policy holder. So these are the main changes IRDAI has come up in the new product guidelines for health insurance products.
Well, Anurag, thanks so much for taking us through that. Let's focus to another interesting story. Then after confirming his high-profile meeting with PM Modi, Tesla boss Elon Musk postponed his India visit, announcing it via Twitter for the weekend. This comes just a day before his visit was expected to begin. ET now Sumit Chaturvedi joins us with what he's picking up from his sources about the possible reasons of this delay. Sumit.
So Elon Musk, who was scheduled to come to India, well, he cancelled his trip over the weekend. Well, the main reason was the bad timing. As sources have told us that definitely he developed cold feet at the last moment because he is going to face the shareholders tomorrow and list. It is going to be a big problem for him. He has laid off 10% of the workforce. Around 14,000 employees have been laid off. Some of them are not happy with the same package he has given. So clearly it would have been a bad call to come to India and announce investments at a time he is facing trouble elsewhere around the world. Well, Tesla cars are also getting a beating from other car makers, electric car makers especially, including BYD of China. At that moment, well, clearly it was not a good call to come to India and announce big plans when there is a gloom and doom in his company elsewhere. Tomorrow is a big day when Elon Musk is going to face his investors, and also in question is $56 billion worth of his package. So a lot of things on mind, and that's why I cancelled India visit over the weekend.
All right, thanks Sumit for all of those details. Moving on then, as India braces for scorching temperatures, the Election Commission of India and the Indian Meteorological Department have joined forces to address the severe heat wave conditions gripping the nation, with temperatures hovering above 45 degrees Celsius in eastern states including Odisha, Bengal, Jharkhand and Bihar. The ECI and IMD have a crucial meeting to strategize on minimizing the impact on voters. Collaborating closely, the IMD is providing the ECI with comprehensive daily forecasts for election areas ranging from seasonal outlooks to daily updates, aiming to safeguard voters from the blistering heat wave. Let's also listen into what IMD Director General, there was a meeting with the Election Commission to mitigate risks like I talked about, and he says that the IMD is in touch with Election Commission and updating it on the situation constantly. Listen into what he had as well.
भारत मौसम विज्ञान विभाग इलेक्शन कमीशन ऑफ इंडिया के साथ लगातार टच में है और हम सीजनल फोरकास्ट से शुरू करते हुए मंथली फोरकास्ट, वीक वाइज फोरकास्ट और एवरीडे फोरकास्ट हम इशू कर रहे हैं. पब्लिक तो इशू हो रहा है, इसके साथ साथ इलेक्शन कमीशन ऑफ इंडिया को नेशनल लेवल पर और स्टेट लेवल पर भी. ये सभी इंफॉर्मेशन को सिर्फ टेम्परेचर के बारे में नहीं, टेम्परेचर के साथ साथ हम लोग भी ह्यूमिडिटी कंडीशन कैसे रहेगा, विंड कैसे रहेगा, नाइट टेम्परेचर कैसे रहेगा, इस सभी का पूर्वानुमान दे रहे हैं.
All right, well, we'll see how it pans out for polling, as we're only done with one round of elections and more phases are left to come. But well, this heat is hitting all of us clearly, Shreyansi. But for that, we'll step into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and updates. Hi there, welcome back, and thanks so much for still staying tuned to Market Cafe. Let's talk about some numbers that are underway today, and from the Nifty 50 pack, we have Tata Consumer that's all set to report its Q4 earnings. What is the penciling in? What are the factors to watch out for? Winnie is joining us with that update. Winnie, hi, good morning. Take it away.
So absolutely, we're keeping an eye on Tata Consumers, the first Nifty 50 company in the FMCG that will be reporting its numbers. When you look at it, yes, the food and beverage segment overall in the consumer staple side for the FMCG pack is expected to better than the beverage segment. So yes, Tata Consumers is expected to do one of those companies which will be reporting a better set of numbers. Expected to see a growth of around 9 to 10% in terms of revenues. Profits of the company are 5% growth, while obviously we'll be waiting out for some adjustments that we could see coming in for Food and Organic India, which they have acquired. So yes, let's keep an eye on those details, because Capital Food, maybe the numbers and the revenue will start coming in during this quarter. So how was the performance there, as well as Organic when will that number start pouring in with the balance of Tata Consumers? That's something we'll be waiting out for in terms of commentary. Margins, expecting a 100 basis point expansion there. Let's not forget the tea inflation, which was impacting Tata Consumers. That's seen a reduction, but commentary is going to be key. Coffee prices have started going up. We've seen, palm oil prices seeing an increase as well. So overall, how is it affecting in terms of the raw material going forward is the key factor to watch out for. Other than that, food business, India food business expected to see a double-digit growth. International business is expected to see improvement sequentially, while the beverage business is expected to see a high single-digit growth. Interesting to watch out for all these points over there, and commentary in terms of market share trends is going to be a key factor to watch out for. Valuation-wise, in terms of FY26 PE, currently it's similar to that of Nestle, one of those companies which are more expensive than the other FMCG companies in terms of a PE. So let's keep an eye out on that.
Absolutely, Winnie. keep an eye on Tata Consumer after the numbers as well. Thank you so much for that update. Moving on, then let's also take a look at other stocks that you should keep on your radar. Now, Mercantile Bank is the first one on this list, and they reported their numbers. Look at the NII figure. What you saw was an uptick of 6% on a quarter-on-quarter basis and 8% on a year-on-year basis for the NII. When you look at operating profit, then there was a uptick of 2% on a quarter-on-quarter basis, but on a yearly basis, there was a downtick of about 2%, of about 7% coming in for the operating profit and 2% up on the quarter-on-quarter basis. Now, when you look at the profit after tax as well, Tamil Nadu Mercantile Bank, it was largely flat. Moving on then, Industries, another earnings counter. Consolidated revenue from operations came in at above, was just a little bit of an up 2%. When you look at EBITDA, then that was down 30% on the flip side. So a big change coming in for EBITDA on a year-on-year basis for Kesoram Industries. When you look at margins, then margins came in at 7.1% versus 10.3% on a year-on-year basis. And when you look at the consolidated loss, the figure was at 244 versus a loss of 26 crores. So on a year-on-year basis, that was a huge widening of the loss for Kesoram Industries, and that's the kind of earnings fine print that we saw for Kesoram Industries. Moving on to Rallis India, then revenue from operations came in with a downtick of about 17%. When you look at the loss was at 81 crores versus a loss of 69 crores previously on a year-on-year basis. Now, when you look at EBITDA profit, there was an EBITDA profit of 6 crores versus EBITDA loss of 64 crores year-on-year, and that was about Rallis India. But which are the ones that you're keeping an eye on then?
Well, Shreyanti, let's keep it with the earnings, and quickly let's take a look at Hatsun Agro as well, because numbers come largely in line with what the street was estimating. Revenue is up 14% on a year-on-year basis, EBITDA up 47%. Margins have also slightly at 11.2% versus 8.7%, and profit is the one to watch out for because net profit has more than doubled at 52.2 crores. Moving on, let's also talk about Mahindra Logistics. Well, a poor set of numbers coming in from Mahindra Logistics. Consolidated revenue is up 14%. Consolidated loss has widened at 12.8 crore versus 0.82 crore this time last year. EBITDA down 11%. Margins have also shrunk at 3.9% versus 5%. So that's a snapshot on Mahindra Logistics. Poor set of numbers coming in. Lastly, let's also take a look at Aarti Surface. Then revenue is up almost 14% sequentially. EBITDA is down 14% sequentially. Margins have slightly contracted at 9.2% versus 12.2%, and net profit is also down almost 15% when you look at it sequentially. So a poor set of numbers coming in for Aarti Surfactants as well.
All right, then that's the update coming in for the stocks that you should keep an eye on account of news flow, earnings largely. Let's also move on and get a sense of stocks you should keep an eye on account of brokerages, and Gaurav is standing by with just the update.
Well, yes. First, let's talk about Endero Healthcare, because investor has now initiated with buy rating and a target price of 1590 rupees. So what they believe, the company has emerged as a top consolidator if we compare it with its peers. At the same time, company has also shown strong balance sheet after the IPO that we have seen. Management's focus is a key point that Investec has highlighted, and on back of this, they expect EBITDA to increase almost by 59% on a basis till FY26, and that is why this bullish wave is coming up on this company. Next, let's talk about Natco Pharma, because Investec is being bullish on this company also, because they have now maintained buy rating and a target price is increased to 1200 rupees per share. Because what they believe is that we may see EBITDA growth in this year. After that, we have, in the past we have seen a slow year for slow 1 to 2 years for the company for the last 1 to 2 years. And lastly, on the back of this, they also expect EBITDA to increase significantly in FY28 to FY33 on the back of the G-Rev limit that we have seen. Next, let's talk about Indus Towers, because CLSA has now upgraded the rating to buy and also the target price to 450 rupees per share. What they believe is that the company is going to be a key beneficiary when we talk about Vodafone Idea's fundraising, because Vodafone Idea is also coming up with 4G and 5G rollout, and in this scenario also Indus Tower could be a key beneficiary. At the same time, they also believe that the past settlement that we have seen of 57 crore rupees could add up 21 rupees per share to the share price, and on back of this, we are seeing this bullish view coming up on Indus Tower from CLSA. And lastly, let's talk about Honasa Consumers, because Jefferies has now maintained rating and a target price of 590 rupees per share. What they believe is that we have seen a significant growth in Derma company. Now the company has achieved this 500 ARR mark, and from here on also they are being very bullish on management's view on the growth prospects, and at the same time they are being positive on the management's view on keeping the company profitable. So because of this, they kept the target price up to 590 rupees and being bullish on consumers. So all in all, on back of brokerages note, we will keep an eye on all these companies because we are seeing a significant upside coming up from brokerages on these companies.
Gaurav, thanks so much for taking us through that. Surely we'll be keeping a close eye on all of these companies as well. But one stock that's going to be in focus today largely is going to be TES Networks, because, well, it's an earnings dhamaka coming in for TES Networks quarter 4. The company swings back to profit of more than 150 crore from a loss just in the last quarter. Sharad is joining us with all the number crunching. Sharad, take us through the stellar set of numbers that have come out this.
Yes, a strong set of numbers coming in for TES Networks, and yesterday also we saw a bump up in the stock price. Stock went up almost 17% in the last session. The revenue, if you look at it, that's jumped almost 137% on a sequential basis, and also there has been a significant improvement when it comes to that, as well as company turning profitable operationally as well. At the order book also at the end of quarter 4, the order book is more than 8,200 crore rupees, and strong updates have been coming and the guidance coming in going for the company, especially in the wireless business. Over here, the 4G and the 5G installation, that has actually aided the top line numbers, and also this is mainly coming from the BSNL's order book. Also, if you look at wireline business, two important updates are coming in. First is this, there are strategic deals are happening in the critical infrastructure, and secondly, they have also started going into a strategic partnership with Telecom Egypt as well. Also going ahead, two important triggers are there for the company. The first one being they are executing the largest ever networks being built. Now, indigenous technology for both 4G as well as 5G, and also in route and satellite transponder. So that is something which we'll be looking at, and currently government is also giving a lot of incentives in this segment, and they are also looking at building end-to-end telecom networks that are margin accretive as per the analysts.
Thanks, Saurav, for that update. We'll keep an eye on TES Networks. But moving on then, Ansh is standing with the futures and options roundup. Ansh?
Right, starting with Nifty first. In the previous session, Nifty not just surpassed about 20, but also surpassed about 50 DMA to close in green. But we may see some resistance at around 22,520, which is a key level to watch out for now. Whereas if we talk about index future, we are seeing that open interest went down by around 6%, indicating short covering, which is also a bit of positive sign. On option front, we are seeing call buying happening at 22,400, indicating traders expecting Nifty to go above this and close above this level. But remember, 22,520 is a level where we may face some resistance. Moving on to Nifty Bank, as you can see in the chart as well, Nifty Bank has actually given a breakout from 47,600 mark, where it was taking resistance for 3 consecutive sessions. Now this level can act as a good support base in the coming sessions. Whereas we talk about index future, we are seeing in open interest, it has declined by around 15%, indicating short covering, which is also a positive sign. Well, option front, we are seeing call writing happening at 47,400, indicating traders are expecting Nifty Bank to face some resistance around this level if we see an up move. Lastly, let's have a quick view on FIS as well. So in future, they covered around 7,900 contract, but they also covered 2,000 contracts from short side, but net to net, we are still negative. It went down by around 5,900 contract, due to which the total long position inched below from 35.3% to 34%. With this, the total long position stands at a 97 session low, which is extreme negative. Now, extreme pessimism can also lead to short squeeze, which is a positive sign.
Right, well, thanks so much for taking us through that, Ansh. But while you're with us, let's also take a look at Aditya Birla Fashion's con call on its demerger. The 2,500 crore fundraise proceeds will be used for investment and debt repayment. Ansh, also take us through other key takeaways from this con call that you've tracked.
Yes, so in the con call, management has said that the demerger of Madura Fashion and Lifestyle business into a separate listed entity named Aditya Birla Lifestyle may take 9 to 12 months. They also showed their interest to do court meeting only once TCNS approvals is in place, and management hopes to close TCNS merger as well in next 4 months. Talking about fundraising, fundraise of 2,500 crore to be used for investment and debt repayment is what the management has said, and they also expect debt to reduce significantly over the next 2 to 3 years. The exact nature of the fundraising, including the type of security, is not finalized yet, but the promoters will have strong participation in the fundraising program. Also, there is a separate funding program for Tomorrowland, which is likely to take place in FY25. Also, they also stated that the opportunities under the Madhura brand segment don't require much capital growth. They are already in the mature stage. At the end of the call, they also highlighted that in the next 3 years, they expect ethnic business to be in 4,000 to 5,000 crore business from current to 2,000 crore business. So these were the key highlights of the bank.
All right, thanks Ansh for that update coming in. But with that, we're out of time on this edition of Market Cafe. Thank you so much for tuning in. From me, Shreyansi, and Snehi, as well as the entire team that put this show together. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.